As we were talking about, aren't just hurting trade and investments, they're hitting personal pocketbooks. In China, the crash is affecting millions of households. CCTV's Roee Ruttenberg joins us from the newsroom. And Roee, the investment structure is quite different in China than in the U.S.
I'll say it is. In the U.S., most trading is done through institutions like fund managers, but more than 80% of Chinese traders are individuals making decisions by themselves. They're mom and pop investors, if you will, and their numbers are growing. 9 million new accounts were opened in all of 2014. Compare that to 38 million that were opened in the first half of this year alone. But because many of those individuals don't have so much money, relatively speaking, they aren't investing as much as trained and wealthier investors are. You can see there on the left in this graphic here, 10 million accounts have less than 10,000 renminbi, about $1,500 worth of value. About 23 million have more than that, but less than 100,000 renminbi, around $15,000. Now, if you combine those together, you'll see that more than 2/3 of the accounts actually have very little invested. Together, they hold less than 5% of China's market value. But these are people, millions of them, with very little diversification in their portfolios and thus a lot of exposure. And these are their savings. We know that some even borrowed to invest in the confidence that the government would protect the markets when the time comes. And now some of them are taking to social media to urge the government to get involved, to do more to resuscitate these markets. Asier?
And Roy, at the same time, you've got international lending organizations, Western governments telling Beijing, wait, sit it out and let the markets adjust on their own.
That's right. Organizations like the International Monetary Fund, they've argued for a long time that China has too many regulations in the way and that it could and should absorb these shocks naturally.
And we believe that the Chinese economy is resilient and strong enough to withstand that kind of significant variation in the markets.
That was the IMF's Christine Lagarde speaking there a few weeks ago. The other thing to remember is that these Chinese investors don't necessarily reflect the health of the Chinese economy. These are two separate things, and they can be quite fickle. They might not be investing for the long run. In July, 20 million of them closed their accounts, and while that might not have much of an impact in terms of value share, it does, some analysts say, reflect overall confidence in China. Asier?
And confidence is a big thing. Roee Ruttenberg, thank you so much.